Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so let's unmute now. So guys, I am currently recording. So let's go through the overview real quick. So starting off with the dollar. Been pretty interesting watching the dollar these last couple weeks to months. Been really just grinding down lower finally as it came into the zone of this ascending trend line. I was looking for a push up. We finally got it. And after this consolidation, we looked like we were looking for continuation, but we actually had a pretty weak close on Friday. So Tuesday, since we are closed on Monday, it's going to be pretty interesting market open. The futures will open up, but it may be pretty light volume wise, so we may not get much decisiveness in the moves during that time. But as this coming week approaches, I'm going to be very interested to see what kind of pullback are we going to have. Is it going to be lackluster, just coming back down towards 103, back towards this ascending trend line, or are we actually going to start piercing under again, tapping towards 102.7? In my opinion, I'd be looking for, if we're going to have bullish continuation over the next coming weeks, for it to come back into this fair value gap zone, potentially consolidate in here, create a higher low from this level right here, something like that, and then have that continuation higher over towards 104.88, and potentially even these fair value gaps up here to grab the liquidity above this pivot here and this consolidation right up here. Okay, so I am looking for more upside, but there are signs now, obviously, with this bearish daily candle that we may have a pullback. And to me, this does look kind of fake outish. Doesn't really look too decisive, but we'll see as we come into next week. Now let's take a quick look at the Dow, S&P, and NASDAQ. So Dow has been in the triangle for weeks. Really hasn't had any decisiveness beyond that. We almost had a breakout here, but on the strength of the dollar, it broke back down. But we haven't had any major moves within the Dow. So as we continue to trade in this triangle, I would stay fairly neutral. There are some bullish and bearish tendencies I see here. Obviously, we broke out from the descending trend line, but we are fighting at a very large fair value gap where there's a lot of liquidity above this level. So there's plenty of reasons for us to come break down and grab liquidity under this consolidation, coming all the way back towards the descending trend line. So if you like, being a breakout trader, you'll often look for a return to the breakout level that would coincide with a move back down. But sometimes you get a bit of a move down that doesn't come all the way back down towards that level, and that's usually enough. So if we do end up breaking this consolidation bullish, then I would look for this level right here to be targeted, and even this very, very small fair value gap to get tapped. Once we get to these levels here, I have to start getting very bearish. I'm under the impression as of right now that we are in a bear market rally in both the US stock market and crypto. So I'm not looking for all-time highs to get taken out. I think that's very unlikely. Of course, the charts will tell me otherwise if it should be, but right now I still think we're in a bear market rally, and this would be my upper target zone for that rally to finally end. Okay, but we'll see what price action does. Overall, as a triangle suggests, you do nothing until it breaks out, and then you get your answer. Next is S&P. Let's take a quick look at that. S&P tapping into the bearish fair value gap here. So this is a fair value gap, a bearish fair value gap off of the weekly and the daily, tapping into it a couple times and having continuation lower. If the dollar does weaken, how I think it may, we actually may not get the pull back down to this level immediately. We actually may get another pull back up, and we may come all the way up towards the 42.50 zone, and then we'll see if we have that failure here. The S&P does have a lot more room to the upside, I would say. I think you can possibly get it towards 4,300, but once we get towards that level, just like the Dow, I'd get very, very nervous for any major moves higher, but we are looking pretty good overall for the S&P for an eventual pullback back towards 3,900 to 3,950. This is the key level that I would want to see it get to. If it holds this level, it gets very bullish in my opinion. Next is NASDAQ. So NASDAQ had the largest extension of the three indices. came into the green zone, actually came all the way up towards the top of the green zone, and now is trading within this bullish fair value gap. If we're going to have a pullback, obviously for the NASDAQ, it's going to be a much more extended pullback because its extension up was much more impressive compared to the S&P and Dow. So if we do pull back, look for the liquidity under these pivots to get targeted, especially right over here, this fair value gap getting filled, and potentially even tapping towards 11,250, just kind of really just targeting this low pullback here. And the whole idea is if we're going to have a prolonged bullish move, as we come down towards these levels, you're going to be looking for potential higher lows forming from this consolidation down here. Okay, so it's okay that it breaks this parabolic move up. They're designed to not last long. The more parabolic a trend is, the shorter the lifespan is. But the key is, what kind of trend are we in? Are we in an uptrend? So even if we break this, it doesn't kill the uptrend until the bottoming structure here is broken. So if we do break down and we create a higher low here or here, it's still considered an uptrend because you've changed character after taking out these high pivots, making a new higher high, and now you're attempting to make that new higher low. So just remember, trends will break the more parabolic they are quicker, but it doesn't mean the entire top is in. Okay, it may be, but it doesn't mean that. All right, next is oil, and then we'll look at gold and silver, and then Bitcoin, and then we are done with the overview. So oil is pretty interesting. I'm very bullish on oil. If you've been following my overviews, my recaps, you know I'm very bullish on oil. I do think it's in a very large bullish monthly structure. Still think it's going to consolidate here for some time. You know, shockingly enough, it's held this fair value gap very decisively. This has been a very, very strong little floor it's built. So far, it's making a lower high, I should say. And what's interesting is this may lead to this finally breaking down, coming down towards my ultimate level, which is 60 bucks. This is like the key level. Once we get towards here, or I should say, if we get towards here, this is going to be, in my opinion, the hardest level to break. We'll likely hold this bullish, and we may trade here for some time. And then I would look for a major move up. However, it's a little indecisive right now, but I do have a bit of a short-term bearish bias on the price action as of right now. But mid to long term, I have to be bullish on oil. So just look for a pullback down, grabbing liquidity under this pivot, and potentially coming down towards 60. However, the caveat is if we get any major news in regards to the war in Ukraine, that could change what we're seeing here. You may get a spike up, and there is some evidence that may be happening. Remember, Putin is amassing a huge number of soldiers, huge number of men on the Ukrainian border. We're talking anywhere from like 200 to 300,000 men. And if he's going to invade, it's likely going to happen again pre-spring because the ground is still frozen. It's a lot easier to move artillery above frozen ground rather than muddy ground. So it could be very soon that we do get continuation in the war. And if you look at the defense stocks in the US, Lockheed, Boeing, Raytheon, all of those stocks, or I should say most of them, are looking fairly bullish. So it looks like big money is starting to bet that we may get another wave in the invasion. So that will change the oil price and probably skyrocket it higher. So just keep that in mind. There are some fundamental things going on that could change the technicals of this chart very, very quickly. Next is gold and silver. So gold, to me, it's pulled back enough. I'm very, very bullish on gold. If you were in the lemon garden, you know we were bullish pretty much all down here. Got in long on a lot of these gold positions down here. We did end up closing out most of them, if not all of them, around this consolidation. I was looking for a pullback here back towards these fair value gaps, but the dollar weakened way more than expected. Gold spiked up, came into the higher fair value gap here, but in the end, it's still doing that pullback I was looking for, unfortunately not as deep as I wanted, but I am looking for it now to actually have another pull up towards this fair value gap up here. And it remains to be seen whether we're actually just going to curve up and actually take out the highs. In my opinion, that's unlikely. We're likely going to start a consolidation here, coming into this fair value gap, making a lower high structure, and then probably creating a triangle structure here. And we'll have to wait and see what kind of character we're going to have. Is it likely going to break bullish or bearish? A lot of that will be dependent on the dollar and also on the war. In my opinion, gold's not breaking past 2,000 unless we have geopolitical reasons for that to happen. That's gonna be very, very hard for gold to break past 2,000 unless we're going into a major crisis, or at least a lot of panic overseas, which would likely be stemmed from a continuation of the war. So we want to watch gold very closely, but overall, I think you got to be bullish on it. It's a very, very strong chart, and this daily candle that closed from Friday and then the one on Thursday, I think this is a very bullish, very bullish structure here that will at least lead towards a move back towards 1880 to potentially all the way back towards 1900. So I'm very bullish on gold, and depending on how the charts look on Tuesday, I may even take a position in some gold charts, GLD, or maybe a gold miner or two. Next is silver. So silver, same thing. This had a clearer topping pattern than gold up here, so I was pretty bearish all the way up through here. Held pretty well because gold was holding pretty strong, but came into the fair value gap as expected, and so far had a very nice close on Friday. Same feeling as I have with gold. I do think that this has the potential to break up higher, and I would be targeting first this fair value gap right here. So this bearish fair value gap right here would be the first level I would want to watch and target potentially for a quick little swing long. But once we get towards here, I'm not under the impression, as of right now at least, that we're going to just take out the highs. After you make a topping pattern like this, you tend to go into a consolidation first, and then the consolidation, if it's bullish, will eventually challenge this consolidation and then break it bullish. Okay, so it's very unlikely to spike right on through. It can happen, it just doesn't tend to happen often. Okay, now let's go to Bitcoin real quick, see what Bitcoin's been doing. Bitcoin's been great. We in the Lemon Garden have been long since 18,000, 18,300, around this zone over here, right over here. And so far it's been doing pretty well. As expected though, from this daily candle, we're going into consolidation. So I always tell you, if you want to know how to read momentum in candles, there's a really simple way. Essentially, if you're looking for upside momentum, just follow the highs of the previous daily candle, hourly candle, 4-hour candle, doesn't matter. This works on every time frame. Anytime that you're closing above the previous high of the candle, assume that it's very likely that you're going to have continuation of momentum in that direction until you don't close above it, like right here. Then you tend to go into a consolidation. Sometimes it even calls the top. You don't know for sure, but you go into a resting period, and then either you have continuation in that trend or you have a retracement. So it's a very easy, quick way to recognize when you're going to see momentum slowing down. After the breakup from here, we've come back, tested the high of this consolidation here, and now we had continuation. Now what's currently happening here is pretty interesting. If you go down to the hourly, take a quick look, we're obviously in a tightening structure here. And as of right now, I would say it's pretty neutral to bullish. I don't see that much bearish tendencies here, but it does look on the daily we need more consolidation here. It's going to be very challenging to immediately break past this level here unless the dollar weakens pretty heavily in the futures market, and then on Monday and Tuesday. Okay, so I'm going to watch this very closely, but as of right now, I do see Bitcoin just trading generally where it's been. You're probably going to just see it trading within this wick and come and test this level here a couple of times. So the monthly high here from last month is going to be of major interest. So right here, this level here at 23,955.86. This is going to be tested often. If the monthly candle, this monthly candle can close above last month's high, look for more momentum to the upside. If we don't, then I would look for either a consolidation or, in this case, potentially even a pullback, because if we were to sell under this level, you're going to start building out a monthly doji. Okay, and that tends to lead to an actual pullback. So something similar to this. You may not get it this bearish, but you may get something that's a little bit more indecisive. So something maybe even like this. And then if you have a bearish month after that, that will lead to continuation down. So for the bulls, or whatever forces you believe move the markets, if they want it to be bullish, they're going to work very hard to keep it above, at least at monthly close, 23,955. If they can't do that, it opens the door for strong bearish sentiment and strong bearish selling to really push the market down. So there's going to be a very interesting fight over these next 10 days, really next week. And then, I find it to be pretty interesting that the dollar is starting to show signs of weakness as we're coming into the end of the month. So that really makes it less likely for Bitcoin to actually find its way back under this level at the end of the month. Now, it may. We just have to wait and see. So that is it for the recap. If you want more, details onto where I think Bitcoin's going, obviously I've been saying the same thing over and over. This is the monthly level I'm looking for, this fair value gap level. So anywhere from 28,000 being more conservative, but you could definitely look from 28 to 38,000 being the general zone. And then once we get there, I'd be very, very careful getting too bullish, because I do think we're just in a repeat of 2019's bear market rally. Once we're here, we'll probably show signs of weakening, and then I would look for some major short levels, and then at least coming back towards these lows to test them out. We may even take them out. Just depends on the sentiment of the U.S. stock market. If the U.S. stock market's fairly, I would say controlled bearish, like not like the world's falling down, we may do what we did back here, just revisiting the lows rather than taking them out. In my opinion, I'm still leaning towards a break under these lows over the next half of the year to maybe even parts of 2024. We'll have to wait and see. Again, we're just going to trade the charts as it comes. All right, guys, that's it for the overview. I'm going to end the recording here. If you couldn't make it live, that's okay. I'm just happy you're watching the video. If you have any questions, make sure to leave a comment on the YouTube video or join the Discord if you haven't. That way you can get in contact with me. It's the easiest way to talk to me. And let me know if you disagree or agree. I'd love to hear your opinion. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.